Okay, we're just waiting for our friend. I think we're just going to get started here and move it along. So, uh, and that way we can, once he joins in, we'll be able. Look at the Texan arrives, and there he is, and you can tell he's just ready to go. Where are you, birdies? Ducky, ducky, ducky. They're flying south. We want you to let us have some of them back. All right, all right, everyone. Welcome once again to KoreSummit Webinar Series 2021. My name is Oscar Joffrey, and I'm really excited once again to continue this amazing dialogue we're having that from every webinar, it just seems like we get another component subject out of it. Today we have two great individuals, two panelists that we're gonna have a short discussion. There's no presentation. These are people that, you would be asking them questions right across the table and having a coffee. And obviously with these Zoom meetings, we're having virtual coffee. So cheers to our two colleagues today. So before we get started in today's subject, first of all, please, Lee, if you can take a moment to introduce yourself.
Yeah, sure. Hi, Lee Saba. I work for Rialto Markets. I'm the head of market structure. I have about 25 years in the financial services arena, mostly focused on electronic trading, fix, and obviously over the last 7 years or so, I've been focused on blockchain and digital assets.
Thank you. And ladies and gentlemen, Jim.
Hey, Oscar. Thanks. Sorry I'm a little late. I had so many invites and Zoom links. I couldn't figure out. I kept dialing into the wrong one. I kept looking at the one during the registration, so my apologies. Jim Rao with Intoro. Intoro is a investment bank, broker-dealer, RIA, and we also have a valuation company called Clear Rating. My own background is likely I've been in the financial services business. Unfortunately, I think it's more than 25 years. I think I'm pushing 35 years, but always appreciate being on with Oscar and look forward to a good dialogue today.
Oh, you are ready for me today. I am coming loaded. The last few meetings, I've had lots of people inquiring, asking questions, and I've been, wait a minute, I know who I'm going to ask all this.
All right.
All right.
Bring it, buddy. Bring it.
Yeah, you bet. So I'm going to, let's start with this because this is one that I personally, I'm having a little bit of difficult time explaining to people the difference between a secondary market and an exchange. And I know it sounds simple well, hopefully the two of you will, but I'd like if we can start from there. What is just high level, what is the basic difference between those two, Lee, since you're knee deep into it right now?
Sure. Yeah. Thanks, Oscar. So Rialto Markets actually offers what they call an alternative trading system, or ATS, as you would call it. We are a non-exchange. However, we are registered. We're a registered broker dealer, and we do have the ability to affect buyers and sellers to offer matches to the subscribers that are members of our ATS. So my compliance guys would say, never call yourself an exchange. But I think in the larger world, folks that aren't focused on this, they would see it very similarly. But we're a singular entity that's a broker dealer that's not a public exchange. We are an alternative trading system, but we can facilitate matches of buyers and sellers.
Oscar,
okay.
Can I jump in and just make it
I need a very basic,
yeah. So I would maybe even go a little more granular and just go. There's kind of put it in three buckets. You have what is a secondary, what is a ATS, and what is an exchange. And secondary is just something that is obviously a security that's being sold after the individual or entity is selling it, and that can be sold in a number of ways between two individuals. It's secondary, so it's being sold. And ATS is what Lee has, and they've got a great program. Rialto's a fantastic shop, and they've got what's known as an alternative trading system, and it's authorized by the Securities and Exchange Commission. And it's not quite an exchange. There's only, Lee, correct me if I'm wrong, there's only really 3 exchanges in the United States. That's the New York Stock Exchange, the American Stock Exchange, and I think is NASDAQ actually considered the exchange. So those are the actual exchanges, and those have a different, higher level of rules. And then there's secondary organizations, ATSs, and that's what Lee has. And I believe there's different types. There's equity exchange or ATSs, and there's different types of ATSs, and Lee can go into more details, but just for the novice listener, that's how I would maybe describe it a little bit better.
Yeah, and I've described it that way. Just people go, so what's the difference? Do I put a bid? And I know there's different languages. One of the latest one that I didn't know, you list on an exchange and you get placed on a secondary market. That little nuance right there is, listing versus being placed. But I think it's important because people are hearing about secondary market, and some out there, unfortunately, regrettably, they're almost describing it like an exchange, but it isn't. It isn't that form. Sorry, Lee, I know you want to add to that.
No, I understand the nuance to it, right? I mean, again, if you're not super familiar with or have grown up in this industry, this will be confusing. But I think at the end of the day, what you can do, coming into an ATS like Rialto's is actually, post your buy order, and hopefully a seller will pick it up and vice versa, right? And we have the regulatory authority to do that under the constructs of the ATS license that we have. So like I said, I'm hesitant to call it a mini exchange. It is not, right? I mean, my compliance officer would lose his mind. But I think for a lot of folks, it would behave very similarly in their mind, but it has a different legal connotation.
Well, totally, right? And the reason I'm asking this is because obviously the subject we're going to have is, can research help? And we know what research does for the public markets, right? So research in the secondary market of private securities is very different. And therefore, we need to understand what that research is related to the venue that you're going to put it in. I mean, yesterday, with one of our clients, they go, Oscar, secondary sounds great. But I don't want my stock jumping up and down. And I'm going, well, no, that's not how an ATS operates. So we take that relationship we know of exchanges and apply it here, and it really isn't that way. So we're not going to dig too deep. Obviously, I just wanted a short description, and thank you to both for that. So let's dive into the real topic at hand, research. And research, well, Jim, you're right. It's becoming the top, question being asked, price discovery. I've been asked that now a lot. So I'm going to put that forward. What does price discovery and research, how do they correlate together? Or are they two separate things first? And I'll come back to you, Lee.
Well, I could argue that in a lot of cases they don't correlate, but particularly at a smaller, more illiquid side, they may or may not, right? You're talking about a lot of finance theories here, and you're talking about the way it should work and the way it doesn't work. I mean, there's even at the bigger levels, you could argue, does a SPAC work and does a traditional S1 IPO work? I could maybe argue that the price discovery there may not work there as well. And if you look at the discovery and the actual price discovery there's some arguments there that may or may not work, but I don't want to get into the theoretical argument on that. That's not the venue for today. But if you look at it, does any kind of information or research or intelligence help price discovery? And that should be an emphatic yes. So the more a organization, more an investor is up to speed, educated, feels like they've had some additional insight into a security, a project, et cetera, the more information, the better. And I believe that helps all parties involved. And I think the more you can provide that, and the more that shops like Rialto provide a platform to allow that to happen, the more that organizations like one of the ones, one of my subsidiaries produces that type of information. I think it's better. The more that you get the other, I think that's always good for the investing public. And I think you can do that. And I fundamentally believe that's just good for markets, and it's good for every stakeholder involved.
And okay, so both are interconnected with each other. So obviously, Lee, you being an operator of one, so how does both of these impact the adoption? I guess that's one, or the understanding of what this means to the average consumer that's going to trade.
Yeah, no, I agree with Jim. That this research and data is super important. And, I love where Rialto fits in the other ATSs, because there's two different ways I think about, research, and, they're pretty macro, but, you have quantitative research, then you have qualitative research, right? And I don't think a lot of that has happened across the private markets in particular. Where Rialto fits in very nicely with that in ATSs in general is that, what is your stock worth? Like, what are people willing to pay for it? What will happen there? Right now, I don't think there's any real mainstream ability to dictate that, right? You could say, I'm going to sell and I'm going to use the big markets here about, my Apple shares for $10,000. But if somebody's only going to give you, 150, 150 might be more, in line with what it's actually worth. So, and I think we can start producing some very interesting statistics and numbers on exactly what a lot of, what the valuations could potentially be, and what the price discovery is, and, a whole host of other areas. But on the other side, the flip side of this is that, what's the market fit for the listing or the placement on the ATS right now? Like, what problem are they solving? What type of, who are their competitors? All that type of research, I think, you have to blend in the two, the quantitative and the qualitative. And then, but right now, there's not too much of that exists. Where Rialto is really fitting in is, and again, ATSs in general in these private markets is giving a little bit more of that quantitative figure to folks that need that. And then obviously the qualitative piece will come, I think, over time. And hopefully one thing I wanted to chat about in the future is a little bit about standards around the quality of the data.
Yeah, it's like anything else, any new industry, everybody kind of goes at it, and then we start getting down. But Jim, your firm, one of your firm's agencies you have, sorry, I didn't use the word correctly there, but it is providing research for the purpose of primary and secondary. So from your perspective, from the firm that you have, what exactly is going into that particular research that could be utilized in either, in this case for the secondary market? What useful information is going to come out of that?
So I don't want to make an advertisement for my shop. That's not what this is about, but it's called Clear Rating. And it's a company I started in 2013. And the concept was to use exactly the same kind of standards and discipline for a Wall Street type of equity research and valuation and ratings. Now, I'd like to get back to the differences there for a private company as you would a public company. And that's a very difficult and different type of analysis. And it's a very challenging analysis, and it's a much, it's a completely different type of approach. Now, if you will allow me just to go off for another 90 seconds here, in that doing the analysis on a private company is very different. So we do a lot of, if you're looking at an evaluation is just what this company would be worth, period. And a rating is what is something relative to its peers or to something else. It's got to fit between 0 and 10, for example, or whatever. It's relative. A rating is relative to something. A value can have an infinite type of number to it. So if you're looking at a valuation, it can be all the components. The biggest factor historically and for us when we do it, and we have models and we have a lot of plumbing and we do a lot of type of things to it, is management. So how do you approach it and how do you value management? You have to think about what their track record is. What is the industry? What's their experience? I mean, all of these things people say, oh, you can't value. Yes, you can. Yes, you can value it. And you have to get down and you have to do numeric. You have to push that into a standards and a numeric thing. It sometimes can be inaccurate, but you do have to do it. And when we do evaluation, how we do it is we try to do the same discipline as you would a Goldman Sachs report or any other kind of Wall Street type of firm that does standard valuation, an equity type report. Now we're not doing credit reports. We're not S&P or Moody's or Duff and Phelps. We're doing equity type reports because that's what we're valuing, the equity, not the debt. So we're approaching it that way. What is this company worth? And it changes, and each industry has its own specifics. So we try to break it down into the 3 key value, what those are, and then we build it up. We have that, and then we also do a risk analysis, and then we de-risk it or re-risk it, and to try to figure out what that range of value is. So that's how we approach it. But when you do a ratings, we have a proprietary ratings methodology. We will also then, we don't do this right now because there's really not a need for it, but there will be when you get more issuers like on Rialto, there would be a need for ratings. And when that happens, that actually will have value. So it'll be translated into an actual ratings. So there's a lot of components. So it's same things, cash flow, industry, competitor analysis, all the types of things that you would normally see in any other type of valuation study. You're just putting into a model and you spit it out. We do it as a range.
That's interesting. Okay, so and Lee, obviously from the Rialto, you being the ATS, this is a report that is engaged by the issuer with a broker dealer. In what context would it be utilized now? Is it something well, this is a better question maybe. Is it something that Rialto uses in this case, or is it something the company uses in order to help price discovery per se, or information discovery by the buyer of the shares of the company?
Yeah, that's a great question. I think, a lot of times research, and, I'm sure Jim can talk a little bit more about this, is independently done, or there's a service like Jim's that actually does it for the masses, and they have a standardized philosophy on how to conduct it. Where I think Rialto will come in is, especially on the quantitative side that I mentioned earlier, like, what are the numbers? What are the volumes? What is going on here? How many orders were coming in? How many, executions actually occurred at what price, at what time? We can really get super granular in that. I think the qualitative pieces in some of the outside research, I think we need to bring in a lot of the practices from Wall Street into the private markets a little bit more in a more disciplined way. Because, and again, I guess I think a little bit about it too with, the difference between, accessing retail folks and then you have, professional investors that come in. And obviously the institutions or the professional investors will have a team and the ability to do some deep dive research that I think will be difficult for most folks to get that type of substance. I'd like to see, a little bit of a standard, have those two issues come a little bit closer together in the private markets. And then, again, having the ATS provide the quantitative mode. But, I think the jury's still out as far as, what type of qualitative data we would provide. But, we're certainly looking forward to the quantitative side.
So, so Jim, so I guess what I'm trying to, look, I'm the issuer, right? I'm the company. I got this clear rating report. I'm trying to utilize it for my shareholders, because it's going to come up. I mean, I know what people are thinking. Okay, so I get this report. What do I do with it? Do I bring it to you, the ATS? I mean, I'm not trying to put you guys on the spot, but I'm trying to get a gist of it. I understand these things are created. Where do they go? Where is, I mean, I already know of a company called CrowdTide. What they're going to do, they're going to grab all this to provide as a free service. That's great. But from a shareholder perspective, is this report that you provide, Jim, from Clear Rating, is that for them to take to Rialto or another secondary market for it to be listed there? Or is this something independently sitting on your website? Like, I'm trying to get a sense of, because the value of that report becomes where it gets accessible to the general public, right?
Well, yeah, it's paid for by the issuer. Normally it's requisitioned. Okay. Now, what we're going to do is we're also going to, as the market develops a little bit, we're going to issue them when they don't want them. Okay. So we're going to do the same thing, just like some of the what are currently the rating agencies, right? So we're going to do the same thing on the research side, and we're going to do both paid and unpaid. Now, you're a hell of a lot smarter as an issuer to want one that's paid, because then you're able to basically put the right materials up front. Because if it's unpaid, then you're looking at whatever is publicly available, and then we can draw whatever conclusions we want to. Okay. Then at that point, then you're at the mercy of somebody that's only going to be able to find stuff that's in the public sphere. So you're kind of, it's kind of like if you're not providing information, you're going to be subject to potentially very unfavorable responses, because then there's no transparency, there's no clarity of what it is. Now, if you're doing this, if you're an issuer, you would want this, because the de minimis cost of what a valuation report is usually more than, if you don't get at least a 50 or 100x return out of it, then it's pretty foolish, because you're usually looking to try to go from if you're doing a Reg A or whatever, you're looking for that to go pretty fast, because it's a third party report. What's the third question every investor asks? Oscar, what's the third question? You're on mute. What's the third question?
Yeah. I'm thinking, what's the third question every investor asks?
First question is, what do you do? Second question is, how much are you raising? Third question is, and what's your valuation? Yeah. Okay, right? Okay, they may be a little out of order, but those are the top three. Okay. The first two questions, every issuer can always answer. The third one, most issuers are standing there with their hands in their pockets. Now, they can somewhat answer, oh, my company's worth $100 million. Then they turn around and the investor will ask, well, how do you do that? How do you justify that? Well, if you're a smart issuer, you would turn around and say, I had a third party report done. Okay, then you stand there and go, look, somebody else said I did this, and these are the kind of ways, and here's our comp analysis, and this is what somebody else did it for us, and this is why we believe we're worth 100 million versus 50 million, or whatever it happens to be. You stand at you have intellectual superiority, or you're at a higher level of approach there, and you stand at, you have the ability to make the salient arguments of why your company is worth a higher level than if you didn't. And I think that's just good preparation. And if you're an intelligent issuer and you're ready for your investor public, you're ready to go. Same thing. When you turn around and you go to Lee and you get posted or listed or whatever Lee wants to, whatever the semantic phrase is going to be, you would want to provide that would either be on there, that would be provided in whatever form or fashion Lee and the Rialto team may want to do, how they want to present it. I'm assuming that would be available to them either in the form of evaluation or I'm happy if all the issuer has, it's their materials, if they're paid for it. It's their material, right? They just, it's their materials to release, right? It's not my materials.
No, I get that. Okay, so I got this report, Lee. I'm now placed on your secondary market. I got it from a registered broker dealer, because we now know that.
Be careful. That's
my apologies. Sorry.
Be careful,
yeah, okay.
Oscar. It is not. Yeah. Let's be very careful there.
Yeah. Well, it was Lee who told me to say that. Lee, I told you.
No, I did not.
You knew. You allowed me to put my foot in it, and now I'm going to get it. You have no idea what it's like getting it from a Texas.
Yes. Okay, my friend. Let's be very, very careful here.
Yes, of course.
Okay. Let me take 30 seconds to explain something. In the United States, under FINRA rules and the SEC, if you're going to issue research as a broker dealer, you need to be authorized to do that. And you need to have FINRA licenses 86, 87s to do research. We do not do that through the broker dealer. Because if you do that, you are issuing either buy, sell, or hold designations as well. We do not do that. And we do also, it's a separate subsidiary, and we keep it outside of any of the regulated entities for that very distinct purpose, because we don't issue buy, hold, or sell recommendations. We do not provide recommendations. We provide information. It's a general research materials. So it does not fall under securities research. It's not providing recommendations. And that point's got to be very clear to everybody that this is what it is. And this is why you're not going to see people do research at the FINRA level doing this at these kind of levels, because doing a recommendation on a Reg CF or Reg A at these levels would only invite all kinds of trouble for a broker dealer doing those kinds of things. I just don't see any BD doing that. If they do, God bless them, and let me know how it works out for you. But
you made some really interesting distinctions. Sorry, I'm taking notes on this, because this is, so you mentioned you're not making recommendations. That's the key element to this report. That it does not.
I think we need to, you and your audience need to be very clear that we're not making. When I do a clear rating report, I'm not making a recommendation. Okay, because if I make a recommendation, that's a totally different game. And Lee is not making a recommendation either. If he puts it on his platform, he's just giving it as another piece of third-party research, like could be a Wall Street Journal report or a Financial Times story. It could be, it's just a piece of independent research. It's a story. He's not endorsing it. He's not providing it. Yeah, with clear rating, and my disclosures are very clear. These are not recommendations. It's not from a broker. This is from an affiliated entity. Okay, and that's how it is. So,
but the affiliated entity is registered with the SEC for you to do this kind of report. Did I get that? No. Okay. So are you doing the First Amendment? What kind of? Okay, you're using the First Amendment.
Exactly. So my entity clear rating falls under the First Amendment, just like S&P and Moody's. So we fall under those categories. Okay, and that's what S&P and Moody's and Duff and Phelps and Fitch and all of those. So we fall under those same kind of categories. Okay. Now there's other categories later. I don't want to get into the
but you know what, that clarity, guys, that's an important distinction, because people are, when you get a report, it's clear rating, but you see Toro's part of it, like, you go, oh,
yeah.
Okay.
So I look at Oscar. I'm not sure, but I'm happy to provide you with 5 of our reports. And I'm not sure if Lee and his team have seen any of our materials, but I'm happy to make them available to anybody who ever requests. I'd be happy to, because some of our materials are protected by NDA. Some I can release, some I can't, obviously. And then because a lot of people want them out. Most people are like, yeah, push them out to everybody. We want everybody to know what we're doing. And then some people are like, I don't want anybody to know what we're doing. So I have to obviously manage and monitor those. But if you see them, you'll never see a recommendation.
It's telling a story, though, right, about the company. But I think to Jim's point, and thanks for doing all the clarifying around that. We're not making any recommendations. We're not pushing any research. We're not doing any of that. You would come to the ATS to transact, right, or to potentially try to transact. And you can do your research, like you said, on Wall Street Journal, Yahoo Finance, the issuer's website, and any documentation they have, using Jim's company, and then you make a decision when you come by the, and that all this data helps you make that decision. Do I want to buy some? Do I want to sell some? What do I do? And we're facilitating that. Now, where I think, our public market data may come into play is, providing a conduit of additional research for folks to say, okay, what were the prices? What were the bid asks? What were the limit prices, and how many transactions occurred? That sort of thing. But yeah, we're not in that business as far as providing research.
No, and it's
recommendation.
It's interesting. We're talking about research, and obviously, look at me. I knew of one type, because there's a company in the market already providing First Amendment research, which is people pay to subscribe, and they, I I do believe they don't make a recommendation, but they take information that's already available in public eye and produce a rating. No, not even a rating. Yeah, a rating for RegCF and all that. And so if that's all there is today, is that type of research, is that limited because where we are in the stage of the market? Do you think that will change over time, where we need more than just First Amendment research? And if we could just take a moment to describe what that means. Again, it's being produced by a non-regulated entity. It's not making a recommendation. It's just a storytelling based on public information, correct? It's not anything that's not available to the general public. I hope I got that right.
Well, Let me tell you where I think it's going to kind of fall out. I think what you're going to do is you're going to see, 3 or 4 groups kind of get out there, and I think they're going to have different levels of quality, right? And like anything, various groups are going to focus on certain areas, and they're going to become good at certain things, and certain groups are going to like certain types of formats, etc. I know what we're going to do. We're going to try to be Wall Street light, in the sense of we're going to try to replicate the same kind of discipline, the same kind of quality, the same kind of stories, etc., in easy to read type of format for anybody between, basically somebody that has an 8th grade education to a PhD. And I'm just being kind of a general, to take a Wall Street, a research paper, instead of repeating it 3 times, telling it once, but having it so people can read it and understand it, that have effectively a middle school education all the way through to, postgraduate, that understands what they're going to be looking at, and to try to do it very simply and to do it. We're not going to be we're not going to be focused on making a lot of cute little charts and making it look like the front cover of the USA Today and kind of make it. I don't think that helps anybody. That to me is cutesy. That's not information research. So our stuff is going to be boiled down into, we have 3 basic products. It's going to be called a snapshot, a report, and a study. Snapshot's going to be stuff that probably is going to be on Lee's site more, a couple pages. People are going to be able to read it, because remember, you're talking about small issues for the most part. I'm talking about the CF and the A. Now, when we get to the D, and this is going to end up with how much is in the market, how much is afloat, how much is, look, a Reg CF paper or something, an issuer, up to $5 million here in a couple more weeks. There's no money in it. There's no, an issuer may spend, X dollars just to kind of help spend it out, kind of get a story, but there's nobody that's going to follow it independently. Like, it's not Apple where you're going to have 35 analysts following it. There's no market. You're never going to, I shouldn't say never, you're not going to see a pool of research people following it independently, because nobody's going to pay for it. There's not a depth of the market to really follow. There's not going to be enough trading activity to justify a whole slew of independent brokers. Then there was also something here a few years ago called MiFID II. I'm not going to get into that, paid research versus, that's a whole other subject that's almost a whole webinar in itself. But the point is that I see it at the A and the CF level, Oscar. It's going to be a hard putt for we're talking 5 or 10 years, in my opinion, before you see anything that's more than just, the First Amendment type stuff. Just because there's no money in it. There's no money.
Yeah, no, I understand that. As long as I think like everything else, I think we're all okay with it. Any information is, somebody compiles stuff that's already out there and puts it in that storytelling. That's great.
Yeah, but
as long as people know what that is, I think that's the bigger issue.
But I think it's going to end up being the reputation of the shops. Okay, and look, it's also going to be a clearing thing for the ATSs, like Rialto. Look, if my shop ends up creating stuff that's quality, they're going to want to have. They're going to say, hey, Jim's shop does good stuff. We really support the way they do it. If we falter in our stuff, they're going to be like, we don't really. The market will clear it, right? Eventually, the market will do its. Let it work. The market will clear itself.
Yeah.
Yes, I agree with that. I hope for the people listening in today is kind of a wake up, because obviously here's one big difference between a stock exchange report from a broker-dealer firm with a buy and sell recommendation. We're not saying that here. These are independent reports being used by the First Amendment, telling story with general public information. Do you think we will see these types of reports that will include information that is not available to the public, and what impact that could have? Lee, just want to hear your comment. And I'll come back to you on that one, Jim, because you're doing them. So I'm just curious, because I've seen the other parties there. They're using the First Amendment. They're saying, look, if it's not available in the general public, we can't provide it because people need to find it. But we just put it together in a way that for people so they understand what they're looking at. What are your thoughts on that?
So what's the exact question? Just
the exact question. I'm Oscar Joffrey, and you forgot who I am. Damn.
No, I know.
There was about 3 questions in that one question.
Yeah, was it? I mean, sometimes. Listen, this subject, I kid you not, the more we tell people we now have secondary market trading, the amount of questions that come out of them, it's all related to, the stock exchange market, right? Because that's what you know, and you apply it. So my question is, under the First Amendment, from what I've seen, is that the companies who provide these reports are doing so utilizing public information, guard filings, things that are on the company website available to them by scraping, and then they compile the story.
Mm-hmm.
My question is, do we foresee that same report could include information that is not available in the general public, right? So, I mean, Reg A's, we know everything's there. Reg CF, we know about, let's say, 50%. Reg D's, I would say. So how does that fit in with a report? I'm just curious to hear your thoughts on this, because, first of all, if it's even possible, do you think it's even possible to create a non-recommendation report with the information not available to everyone?
Yeah, so I would say, I think this ecosystem will evolve kind of similarly to what Jim was saying. It's going to take a lot of time, but I think as the market matures, we're gonna see more influence from institutions, possibly, getting into the CF, maybe the A's, or the A's and the CFs. Obviously they're already into the D's, but they do their own independent research. And there's going to be shops that are going to say, well, I want what the $1 trillion asset manager has, and there will be services starting to be provided. I've already heard, like Bloomberg and some of these other folks are starting to really develop teams to focus on some of this. And some of that will be what I'll call, I guess, subscription based. You might have an independent analyst that covers a whole wide spectrum of certain companies and certain genres. But I'd be hesitant to say non-public. I'm not sure what that would mean. But you might have an independent analyst or an analyst from a large firm be able to do on-site research, do some interviews, and actually come back with a more structured and deeper dive ability on that particular company that you could pay for. Again, that wouldn't be Rialto. That would be something.
No, that would be Jim. So, okay, and I'll put you, Jim. I'm a private company. Obviously, this public stuff, but I have other stuff. Do you include that or you exclude it? Maybe that's a better question.
Well, look, it depends on a couple of things. One is the issuer and what they want to provide, et cetera, right? And what they're disclosing or not disclosing. I mean, if it's in a report, then I'm not sure how much. I mean, if it's in a Reg A, it's pretty much already disclosed. For the most part, it's already disclosed. Probably, I'm not sure what wouldn't be disclosed already in a Reg A. I'm not quite sure what it would matter in a Reg CF because it's so small. Then we're going to get into issues whether or not it's a subscription type service, et cetera. I think what we're going to see too. Lee brought up a good point: is who's going to start asking for it now. We're getting approached because, back to why we don't have it in eToro. So, Oscar, do you now understand why it's not eToro that's doing the research? It's actually a separate subsidiary. Can you hear me okay, or did? my volume go up?
No, I can hear
okay.
you. Sorry, I mute myself because I got so many comments to come at you.
So now you understand why it's in a separate subsidiary. So it's also not, so exactly the reason why you asked all the questions. So it's also a subscription issue. It's a size issue. We have obviously from our broker dealer and our primary offerings issues, and the way we do distribution, and also through our RIA and our relationships with our distribution partners, we're getting from some of the bigger RIAs requests from how does it work, right? Some of these issues and they want to know for their advisors, because the advisors start to ask a couple of things. How does crypto work? How do we get into doing some of the things? Why do you how do these things work? How does the digitization work? All of these types of things. So we're sitting there at that crossroads. So we're getting it from the RIA community, and that's where you're going to see the biggest change, in my belief. And that's what we're focusing on, is educating not the individual buyers, guys that are going to buy $1,000 or $2,000 or $5,000. I'm looking from the RIA guy that's looking to make a $2,500, $250,000 buy, that really does want to say, okay, where is that piece of research when he's looking at $1 million buy? Say, you know what, I really do like that. What is it that, and they want more than just a publisher's comment in a monthly publication or something. They do want something more than that. They do want somebody that's kind of a third party, and they're looking for somebody that has a little bit of a pedigree, right? So this is where we stand in our world, is that, because in our shop, we've got attorneys and CPAs and CFAs and, KIA designations that basically create these reports. And actually that's where we get. So that's the space we're going to play in. And I think that's where you're going to get the biggest bang, is on the Reg A, interfacing with that RIA community, because they're looking at it in the same way you get those third-party reports that have to be done for the compliance officers at those bigger RIAs. And you don't go anywhere until you get over that hurdle. I mean, Lee knows that spot. I mean, it's the same, you can do a lot for the little guys, but if you really want to make this market more, liquid and quasi-institutional, you've got to get into that RIA space. It's imperative.
Yeah, and I agree with that. I'm going to throw an interesting little wrench in here. That's me. So as you know, a company can purchase a 409 report, 409A report. You're familiar with those? How does that, well, one, would that report be included in your not analysis, in your storytelling? Or would that be independent of it, given that that has other implications in its own? So that's my first question to you, and then I'll come back to you with that.
Okay, well,
as well.
A 409A report is a very different report. 409A is really when it's at the beginning of an organization where you're really trying to get to the very early basis for stock options and allocations of shares for tax purposes. And you do a 409A for that. And there's a couple of reasons why you want a third party. You can do it yourself, but if you do, you're subject to the IRS, and you don't have safe harbor. If you have a third party do it, you have safe harbor, and then it's up to the IRS to prove what your valuation is. Now, we do those on occasion. We don't like to do them because they're a lot of work for very little money. There's a very large organization in the United States, starts with a C, 5 letters. They do it for like $3,000. Okay, it's hard for anybody to compete with them. They do 10,000 of them a year. It's hard to not use them as a 409 outsourcing model. But that's a very different thing. That's a lot different than a research report. That's just kind of a valuation of your entity for stock options and everything. It has really nothing to do. In fact, a 409A is the inverse of what you want to call your valuation, because you want your 409A valuation to be $10,000. I'm being flippant to be $10,000. But if you're going to raise money, you want it to be $10 million because you want to tell the IRS in the United States you're worth $10,000, but you want your investor to be 10 million.
Hey, wait a minute. Isn't that what's going on right now in the Supreme Court regarding some assets?
I'm not going to speculate
we're not
on that.
Go into that one. Okay, I get it. I just wanted to understand. I do understand the differences, and there is another company even bigger than that one. Just so you know, for the smaller guys, and they're called Scholar. Out of Utah, they do a great job and sell a lot less.
They do,
and I just wanted to know how you can combine the two, if it makes sense.
You can, but it's just you just take it and you do the reverse out of it. It's the starter.
Yeah, no.
By the way, it's not the end of it. I mean, a 409A is literally 20% of what a valuation report is. It's just the start.
Yes, and some people treat it as the holy grail, right? Again, how people are presenting it is the key, and part of this education is to, take away the myth and say, okay, this is what secondary market is. This is what the research report is. So, Lee, coming to you now, you're the operator of this. So you got the 409A out there that you can't restrict me from putting it and publishing it in whatever form I want. And then, of course, I have this independent third-party non-recommendation report. If it's out there, is that something you place alongside with the issuer for the new buyer to purchase, to give them some information? Or those, again, like what Jim said, they're distinctively different and you just let the buyer find it on their own?
Yeah, I mean, I think, we're in the early stages of this game, right? I use this analogy quite a bit, but, we're probably just ending batting practice for an extra inning game. We haven't even taken the field yet. So we're very early. I think things will evolve, to providing a certain level of information in a standardized format. But I also think that, if you're going to issue or be placed on our ATS or any ATS for that matter, you're going to want a certain level of information for folks to do some research on you. That's consistent. So, if there's one issuer that's, placed on our ATS and they have, not a lot of open information out there, that may restrict, some of their trading or ability to be liquid versus, somebody who's, an open book and is, demonstrated a lot of access to their company and their in their ability to be the strongest market fit in their category. I think they're in a better position. So basically, I think the right data coming in and being presented is better than less data in the long run. And I think we'll eventually gravitate towards that because people are going to demand it.
No, I agree. And I think it will get better. So here's what I'm going to, maybe a bit biased in either way, but obviously I'm going to start with you, Lee. So if our report is being generated, because we're going to see others, I mean, there's a broker dealer who created an entity like Clear Rating. So they're a broker dealer. So you kind of know there's some ethical components to it. Somebody said it at the beginning, it'll depend on the firm creating it. So we have others that are younger into the market. They're using technology and they figure by aggregating. How are you going to moderate which reports you bring into this picture? Because this is what we're telling people with First Amendment reports. From what we heard from the lawyers is that companies have to be very careful with it, because if you didn't engage with it, so with Clear Rating, from what I understand, I'm engaging with it. The other ones I've seen, they're doing it on their own, and it could be good and bad. And if a company gets involved in it, it could be part of their entire capital raise. So how are you going to review the firm that's actually creating it, and what are the things that you're going to be looking for to give you comfort that even though it's a non-recommendation report, that this thing isn't some shiny rainbow lucky report that could just go haywire? What are your thoughts on that, Jim? I mean, Lee, sorry, Lee.
Yeah. So before you get placed on the ATS, there's obviously, a bunch of homework that has to happen by our compliance team and everybody else, within the Rialto. And there may be, some folks that don't quite add up and won't make the cut. So, I think that we have to be crystal clear that, we're working with quality issuers here. As far as, where we're going to be, in the future, as far as, providing any information about those companies, I think it remains to be seen. There's certainly some questions there about what we want to provide and what we can provide. But I also, I think about it, again, I came from the traditional market space, not so much the private marketplace. And, you don't go to some of the large exchanges looking for intel on the company you're looking to buy. You've already kind of, where to go to buy it or sell it, and you've already done your research independently. Where the ATS is very similar in that function. So, you would use somebody like Jim's company or others, plus your own, methodologies. Maybe subscribe to another firm to provide some of that independent voice to make your decisions. Once you've made that decision, okay, now you're a subscriber on the ATS and you want to get involved. I mean, I know I'm kind of simplifying this a little bit, but we're not in the business right now of really focused on the data piece of it. Those buy and sell decisions are independent. And folks like Jim and Intoro and his other companies provide that level of data, I think, that we need. And I think it's just going to get better over time. But I think there is going to be that top-down pressure as these asset classes grow. We're going to get that pressure to be better and provide more data, and the issuers themselves will be pressured to probably do that a little bit more. I mean, I'm assuming this actually, but I can't even imagine a world where the data doesn't get better.
This conversation is pretty. I have to tell you, of all the ones that I've done regarding research, this is the one that I really, and do you know why I'm digging in more deeper into it? Is because I'm getting a much deeper understanding. No different than when I first heard the word ATS. I thought it was this. Now I know which buckets to break it into. It's just like breaking it down. So Jim, I mean, what is going to be the differentiator? I mean, I know clear rating, the fact that you guys have a BD background and you have this. Do you think that I guess what I'm trying to help the audience understand is there are going to be different providers saying, I provide this. How are they going to be able to decipher between one or the other? What are the things they should be looking for? So the report that comes out, obviously with no recommendation, that's already flat out. So
I think it's going to end up being kind of style and substance and all the materials in it. And I think if you look at it, it's just like S&P or Moody's or Duff and Phelps or Fitch or any of the other type of, similar services. I mean, some people have one like over another. I mean, it's going to be that type of thing. Some are subscriptions, some are whatever. It's just like once we have a pretty good sized library, you'll be able to go to clearrating.com and be able to pull off all the, the materials there. It all depends on how some of these models end up rolling out. It's going to be kind of let the market determine how it ends up determining. What we're going to do is focus on a quality work product done by people that are, industry experts. I'm not going to stick a healthcare person on a software deal, right? It's somebody that's going to really kind of be knowledgeable on our space. So we're going to focus on that top 50% of the reports that make sense, just like Wall Street does, right? We're going to focus on the companies that people have an interest in that look like they're going to be substantial and players. At the end of the day, somebody's going to look at a company and say, is Clear Rating even following it? And if we don't, it's probably not something somebody wants to look at. It maybe just end up being that. You don't know how this is going to end up. It may be the kiss of death. You don't know what some of this is going to look like. We just feel like
you used a good word. Jim, you used a really good word there, and thank you for that. The kiss of death. I mean, this is the when I speak to some of the lawyers, they go, "Oh my God, you know, if they don't have an idea what they're doing, this could be the worst thing for any company." We've seen it. We saw it firsthand by a company who does using the First Amendment, and one of their staff sent out a message about a company that's doing a Reg A, and to entice them to come and watch a webinar, and the language was, "Come and see how this new multi-billion-dollar opportunity," and it came from a rating company, right? So immediately we all got together and we wanted to help this company and make sure that you understand. So it seems like there's still, for those who are new to it, they need a lot of guidance. You shouldn't be doing this without legal side. Obviously, being a fender broker dealer, your head is already twitched around. You can't do this, you can't do that. Would that be a fair assessment?
But if you're not licensed in any form or fashion, you can get away with a little bit more, right? But I think the market, if you're a serious investor, like I said, if you're just popping $1,000 here or there, you're maybe not less. That's not my target market. My target market's going to be the guy that's going to be writing or investing a substantial check, whatever that may be, 5,000, 10,000, 100,000, whatever that number. Those are $1 million, whatever. Those are the kind of, those are the investors that I want to make sure that we take care of, because that's who we want to take care of. If it's the guy that's there to put $500 in it, it's a gamble and a crapshoot. He's not reading the research anyway. He's trying to figure out whether or not this thing's it's a gamble. He's betting on black. Okay. That's not investing, that's gambling. What we're trying to research is for somebody that's looking to find intelligence under the word investing. Okay. Let me underline, bold, italicize the word. Okay. That's what it's designed for. I'm not there to provide somebody, insight into the word gambling. That's not, that's a different concept here.
Okay, no, that's fair. I think I got a better, I have to tell you, of all the conversations I've had now, I got a better idea. I obviously there's still more questions, as you said, Lee. We're evolving this into the secondary market. We're early on, but it's interesting enough that people are already asking about it. Do you know what I mean? So that it means that
they should.
Okay.
They should. And look, Lee made a very good point. Look, even if we put materials on it, let's say there's 4 groups similar to mine. Okay, there's 3 others plus mine. Okay, and you don't go to the site to get information normally. You don't go to Rialto to find the research. You usually have done it beforehand. It's just like you don't go to nyse.com to do research on, I don't know, whatever stock you're gonna look at. Okay, you've kind of done that before. You've done broker report. You've done all kinds of other research. You've done DuckDuckGo or whatever your browser search engine, whatever you've done all kinds of other stuff. You've got public. You've gone and done that before, right? You're going to go to clearrating.com, or you're going to go to other things. You're not necessarily going to go to his site to pull it. His site is going to be available because you're going to be able to execute, and he may have links and all these kinds of things, and he may have,
right.
I'm assuming I'm going to tell you something really scary. So we already know now that on a particular Reg A offering, more than 90% of people do not review the Form 1, and it's right there, right? So we know, and then afterward, I know I get it, Jim. I do. They're looking for the flashy stuff, the video and all that. I can see how someone could take advantage of this, and I'm glad that you've taken the time as well, you Lee, today, and we're discussing. I feel like I need to do more of a deep dive, more specific, because the questions are coming at, and I do know people are doing the comparison between public research, public company research, which tells them clearly a definition of buy and sell, where this is not. So we got that, and then of course the differences.
If you want a webinar where I break down how to build a research report, hey, that's a good webinar.
Sign me up.
Well, thank you. And actually, Jim, you've given me 2 topics already. I've created one. One
Yeah,
that
well,
came
we're
out
doing
really
this. We're
cool.
doing the structuring one. How to
It is
structure a deal. That's what I'm doing next
exactly,
week. I'll tell you how to do a deal.
exactly. And this is the whole idea of us. We're agile. We need to be, because look, during the discussion, you put 2 people that know the space inside out. Just by having a discussion, it's no different than having a meeting. The only difference now is that now everybody gets to share in that discussion and learn from it. That way they're better prepared. And I love that. How to build a research report. That is a great, great topic, because it will itemize to both
It's
the
an
audiences.
art, not a science. It is a absolute art, not a science.
I like that. I like that.
And not easy either.
No. I
Particularly in the
certainly
particularly doing private securities.
yes, of course.
And no disrespect to the individuals that do private securities or public securities, but anymore a monkey can do a public securities valuation, right? Because you have all the materials. It's thrown in there to do it. The art of the deal is to do a private security.
Yeah.
Well, that's where we are today. What a great discussion. Lee, it was good seeing you as always. You and I got a lot of work to do.
Yes.
As you know. Jim, a pleasure as always. I know you missed our webinar yesterday. Sean and I had a wicked time, by the way.
Well, I apologize. I'm actually not in Houston. I'm actually in Miami, and I appreciate my colleagues stepping in for me. I understand you guys had a good dialogue.
Wow, so you're in Miami. Did you want to hear that, Lee? I mean, I'm in the freezing cold. Haven't gone outside, no sun.
Well,
here he is in Miami.
don't feel too sorry for me. Last week I didn't have heat or power, or food or water. So last week
I was
wasn't
worried
fun.
about you. I'm glad you're doing okay.
Fun.
Listen, Lee, Jim, great to have you on board, and we are. I'm going to set that up. I love that topic. That was a great topic to have. And now that we're really digging into secondary market, it's going to make a big difference. So thank you again to both of you today and everyone. And again, if you want to watch the videos, they're going to be available at our KoreSummit.io or our YouTube channel at KoreConnects. And thank you, Lee, Jim, and I look forward to seeing you both again soon. Take care.